Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So in this week's video, we are going to cover, of course, the numbers out of China, numbers out of Europe, and then I want to talk about Tesla version 13 FSD. Now, I've seen already a couple of clips. Some things really look very good. But my question and my basically complaint here is, why doesn't Tesla provide the real data, right? We've seen the 5x improvement, 100x improvement, this and that. Why can't we get the same data that we get for the safety reports, right? When Tesla is on autopilot compared to the average driver in the United States, how many accidents, etc., etc. Why isn't Tesla providing miles per intervention, right? We have seen plenty of folks talking about the 5x, 100x improvement, but that's only with an x-axis. Where is the y-axis? So let's discuss all of that in this video. It does seem like Q4 is going to be one hell of a quarter for Tesla. So without further ado, hit all the buttons, like, subscribe, do all of that. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So we'll start off with the Tesla weekly insured number in China. That number came in at 16,700. For the members of the channel, you probably got those numbers already on Monday or Tuesday on the Google Sheet. Right now, we're also 2.4% higher quarter over quarter, and year to date in China, we're up 7.1% so far. Then checking in with our favorite German luxury brands, so Mercedes, Audi, and BMW, or BMW because it is the German brand. So Tesla here has been outperforming in the last couple of weeks, not really surprising. Checking in on some other Chinese models, we've seen a small dip for most of the brand, a nice increase here for the Xpeng Mona M03. As for the China market share from January to October 23 compared to 2024, we see a big increase here for BYD, 33.9%. If we go to Tesla, that's only up 2.5%. A lot of others are losing and are losing quite a lot. Then switching to Tesla Europe, well, certain European countries, as always, the UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland, we are up 15.7% week over week. The number came in at 4,100. And year to date, we are up 10.13% compared to the same period last year in all of those countries, which, to be honest, is really not that bad compared to, well, all the negative headlines that we have seen. And looking at the last couple of weeks of this year, it does seem like we could be doing much better this time around. And as you can see right here, the momentum just keeps going, and the UK is doing quite a good job for Tesla. Of course, Germany, quite a big market, but it does seem like, well, the other countries are picking up the pace while Germany is falling behind. Now, switching back to Tesla, and this is an important point to note, because we've seen an article come out from Bloomberg that says and visualizes here the following. China new energy vehicle makers pay suppliers and the time between those. So from 2021 to 2023, we can actually see that Tesla is improving. They said here, after confirming this data, our payment cycle to supply chain partners in 2024 will be shorter than last year, and now it only takes about 90 days. Back here in 2022 to 2023, Ray4 Charles here wrote on X the following figures, and well, it does not look great for the Chinese companies like BYD, Xpeng, and NIO. Why is this important? Well, because suppliers will probably or could just favor Tesla because, well, why would they do any favors to other companies that just take way too long to pay them while they could supply Tesla, which is also a huge brand, very popular as well. They could just go with Tesla and put them at number one and tell the others, look, if you want, just pay us in time, because if Tesla can do it, then maybe you should be able to do so as well. And if not, then that there's probably a reason why, or a negative reason, shall I say, why these companies can't pay on time. Moving on here to the next big news that came out is that, well, now starting November 27th, so a couple of days ago. All leased Cybertruck Model S, Model 3, Model X, and Model Y vehicles are eligible for purchase at the end of their lease. Now, some people said this is great news. The others are saying, oh, why are they doing this right now, right before they think that they will solve FSD? That just doesn't make much sense. Well, I think it does make sense, right? Because you're now giving the option for those that have driven Teslas for a long period of time to own a Tesla and turn that Tesla into a robotaxi whenever that will be available. Of course, previously some people were saying, oh, maybe Tesla will just buy them back and that will be the fleet for Tesla. But I think option number one just makes more sense, and this will also probably push the Q4 figures deliveries much higher as well. Now, what do you think? Do you view this as a positive thing? Do you view this as a negative? Let me know down in the comment section below. Then something extra here just for me. This color should definitely be available on future Tesla models. This green here, the British racing green, is just perfect. Last couple of things here. One great news for Tesla Energy. Apparently the Tesla's Shanghai Energy Factory will be completed ahead of schedule this December. So yeah, I mean, Tesla Energy right now is already doing quite well. Imagine what will happen once this thing starts functioning at 100%. I mean, 2025 does seem like a interesting year for Tesla, to say the least. And now I want to focus a little bit on this thing right here. This came from Frida from Altimeter Capital. You've probably heard already Brad Gerstner talk about that during the podcast. Now, I've seen this and I'm like, okay, this looks incredible, right? This looks great. But how did they reach those numbers here, right? Did they test something out? Did Tesla give them the right numbers? What exactly is going on here? Plus, where is the y-axis? Isn't this quite an important part of all of this, right? Because 100x of what? 10x improvement of what? We need the y-axis for this to make a lot more sense. And so, what did they base their data on? Well, tweets and mentions during the earnings call. So tweet number one here is this one. This was from a while back. 12.4 goes to internal release this weekend and limited external beta next week. Roughly 5x to 10x improvement in miles per intervention versus 12.3. 12.5 will be out in late June. So yeah, this was quite a while ago. Then we've had Tesla AI tweet this out. So 12.5.2 with 3x improved miles between necessary intervention. And then in October, version 13, well, it's actually in November, with a 6x improved miles between necessary interventions. But again, a 6x of what? What's the number? Why can't they give us the numbers? Because they already give us this, right? The cumulative miles driven with FSD, supervised, and with FSD V12. They also give us this, right? The miles driven per one accident for Tesla vehicles using autopilot, Tesla vehicles not using autopilot, and then the United States average. So if you can give us all of that, why can't you give us the same thing for FSD? And I'll continue. The rest of the things were mentioned during the earnings call. Version 13 of FSD is going out soon. Ashok will elaborate more on that later in the call. We expect to see some roughly 5 to 6x improvement in miles between interventions compared to 12.5. They then also said, we already made a 100x improvement with 12.5 from starting off this year. And then with version 13 release, we expect to be a 1000x from the beginning from January of this year on production software. By Q2 next year, we should cross over the average human miles per critical intervention, call it collision in that case. Then they also said here, our internal estimate is Q2 of next year to be safer than human and then continue with rapid improvements thereafter. FSD is actually getting so good that it takes us a while to actually find mistakes. And when you start getting to where it could take 10,000 miles to find a mistake, it takes a while to actually figure out which it is. To be honest, if this was black on white, it would not have been so difficult for them to show us what they're seeing in the back end, right? And I'm not trying to hate here because, well, as you know, Tesla is my number one position. I'm very bullish on the company, but as a shareholder, I have the right to ask questions and get more data, right? I don't own a Tesla with FSD. I don't own a Tesla. I don't own a car, but I've been in one. It's very impressive. The FSD took me from a restaurant to the hotel. Great. But I've also seen plenty of videos that show me that, well, it's not that difficult to find issues. I've seen plenty of issues. So yeah, when they say X, why can't they show us Y? To me, it doesn't make much sense. Maybe in the next shareholder deck, bam, they give us the chart, X-axis, Y-axis, great. But until then, I will keep asking the same question again and again. Because yes, to reach FSD unsupervised, you will probably have to show regulators that, look, this is the data that we're seeing, this is how we're improving over time, and it's as safe as could be. For now, we will improve every single time. But to us shareholders, I mean, I keep seeing, and this is very bullish, I've seen plenty of videos that, well, blew my mind. But I've also seen plenty of videos that, well, this is rookie mistake, right? So a lot of folks are very, very excited, and rightfully so, because this technology will probably change the way, well, you drive on the road, you get from one place to another. But then again, show me the Y-axis, please. To end this video, we are going to look at the chart right here, the graph. We finished the week with a red candle here. We did peak at $361 or so, well above the 20, 50 and the 200-day moving average. The stock has momentum. We were overbought, but we finished the week just not overbought. So maybe, is this a short-term top? Is it not? I don't know. But yeah, the stock has run up quite a lot in the last month. The whole market has run up. So if there is a correction, it's probably not going to be a company-specific correction. We've been talking about that for plenty of other stocks out there. Some of them are extremely overextended. Stock market might also be a little overextended as well. But as we've seen in the past, just because stocks are overbought does not mean that a crash is imminent. You can stay overbought for a long period of time. But to conclude, Q4 looks like a very, very strong quarter for Tesla, and Tesla is definitely going to exit 2024 a much stronger company than how they exited 2023. Quite a lot of catalysts happening in 2025, even if you, let's say, put FSD on the side a little bit and definitely put aside Optimus as well. All the rest, as we've discussed in past weeks, still quite a lot of catalyst for the Tesla business today. So overall, that's about it for me for this week's episode. Do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.